I'm back. Okay. I was in toilet doing something else. I was really busy. I gotta do what I gotta do, right? Okay, let's get back to where I was. Uh, though the 4 week period ended May 15, the average monthly cost of servicing a mortgage for a home asking the median sales price across the country was up 43.4% over the same period last year, according to reference data. And that jump resulted in the following chart: a jarring visual to represent the unprecedented increase in the cost of home ownership this year. Home buyer mortgage payments 43.4% year over year. Hmm. In the simplest terms, higher interest rates make it more expensive to borrow money, and the primary way most consumers interact with these costs is through buying a home. Hmm. Specifically, higher interest rates lead to higher mortgage rates, which lead to higher out of pocket costs to purchase the same home. To be sure, home prices have been on the rise and play some role in the higher costs. Over the same 4 week period ended May 15, according to Redfin, the median asking price for homes in the US rose 17.9%, but a mid-teens increase in home prices has been about the national norm since the post-COVID home buying frenzy began in earnest during the spring of 2021. Furthermore, a steadier policy hand from the Fed throughout 2021 made these increases easier to absorb for buyers. U.S. mortgage rates remain above 5%, 30-year fixed rate mortgage average in the United States. Hmm. Last year, the Fed was sure of the view that any inflation pressures would prove transitory. The central bank held interest rates near zero point 0% as a result. Hmm. So here, the main point of this article is that fat matters to regular Americans because um, high interest rates can possibly affect the way people live in the states. That's why it matters to most of Americans because high interest rates leads to mm, the, the problems of getting home, right? So there's some good news in the market sell off. Okay, I'm no happier than anybody else to see a railing stock market triggered most recently by earnings misses at big retailers such as Target and Walmart. But I'm delighted by some of the details. You should be too. One of the reasons retailers are underperforming is that they built inventories of goods they're now having trouble selling. That might force them to sell excess inventory at a discount, as Yahoo Finance's Brian Chang reported on May 19. That's excellent news. Here's why. Remember, like yesterday, when the biggest problem in the economy was a shortage of goods, right? Broken supply chains, cheap shortages, jam ports, missing truckers, any other rising a bill. One because of inflation, now 8.3% was a huge mismatch between soaring demand for furniture, appliances, electronics, home remodeling materials, and other things we spend all our money on during the stay home phase of the COVID pandemic. Few people wanted to go out or travel back then, which caused a massive shift of spending toward goods away from services. There wasn't enough supply to meet the demand for goods, so prices soared and there were suddenly wait times for ordinary things. If retailers are now telling us they've got more stuff than people want to buy, that means the consumers are rebalancing their spending back toward more normal patterns. Hmm. Yes, it's been a long time coming, and it's a good news for the direction of inflation. Blah, blah, blah. Okay. Next, market strategy shift. Bitcoin is going to go into the millions. Despite Bitcoin's violent sell-off, market strategy CEO Michael Saylor is holding firm. The Bitcoin bull said he's in it for a long term and his strategy is to buy and hold the cryptocurrency. There's no price target, Saylor told Yahoo Finance Live. I expect we'll be buying Bitcoin at the local top forever, and I expect Bitcoin is going to go into the millions. So we're very patient. We think it's the future of money. Sailor said Bitcoin has sold off with other risk assets like stocks as the Federal Reserve has moved to raise interest rates. Investors have sold off riskier assets or assets with valuations that had soared. That sailor said is separate from the meltdown of stablecoin Terra USD and its sister token Luna, which he thinks will accelerate efforts to regulate stablecoins and security tokens. They'll be good for the industry, he said. Over time, I think as people get educated and as they get more comfortable, I think we'll recover from this drawdown. On the back of the meltdown in Terra, Sailor said regulators are going to accelerate their regulation of stable coins and cryptocurrency tokens, and that the winner will ultimately be Bitcoin. Once people figure out why Bitcoin is superior to everything else, then the institutions are going to come in with large sums of money, and we're not going to have to struggle through this massive explanation of why we're different than 19,000 other crypto tokens, he said. Hmm. On the future of payments. Here the guy named Sailor, he thinks Bitcoin is the currency of the future, and that um, uh, stay firm on holding it because it's never gonna be get away from you. It would only its value will only rise other than going down. So stay firm. Even the price of Bitcoin goes down these days. Don't just be influenced by the way things are happening these days. It's what these guys are saying. Okay, hit the buy button. Just 3 oversold stocks as analysts. Okay, what are they? Rising interest rates, supply chain constraints, and Russia's invasion of Ukraine are all issues currently plaguing the macro climate. The problem with all three, says Tony Dart, Cacker's chief market strategy, is that for each problem, there's no easy access strategy. It's important for you to come up with access strategy, but not many people have it. So the tough conditions are likely to persist then. However, on the plus side, well, these issues have sent most corners of the stock market into a tailspin. Now, investors are presented with stocks for which the term oversold rapidly applies. Hmm. Against this backdrop, some straight analysts have pointed out 3 oversold stocks that are due to let off some steam and push higher. We've used the range database to see why they are poised for a rebound. Let's take a closer look. APTV. We'll start off with APTV, an automotive technology firm with a global footprint. APTV provides products, systems, and software to the automotive industry, namely to vehicle manufacturers, which use the company's offerings to make cars safer, improve efficiency, and increase interconnectivity. The tech firm used to be known as Delphi before it spun off its powertrain segments and rebranded to App TV. This is a big operation with 155,000 employees and 14 technical centers. Hmm. In addition to customer support centers and manufacturing sites spread across 45 countries. Okay. The auto industry struggles during recent times have been well documented with supply chain bottlenecks and chip shortages impacting production. Despite these issues, APTV managed to dial in solid first quarter 2022 report. The company beat the forecast on both the top and bottom line. Revenue increased by 4% year over year to reach $4.8 billion, beating the $4.06 billion consensus estimate. Non-GAAP EPS of $0.63 or came in above the analyst forecast of $0.61. Hmm. Okay, here's this. APTV's leading position, electrification, active safety, award momentum, and proactive cost controls provide the foundation for our 2022 outlook and sets up a 2023 to be a very interesting year as headwinds abate. Based on all of the above factors, Gasly's rates APTV shares a buy and sets a $158 price target. Okay, here's let's see, APTV. Hit the buy button on these three oversold stocks as analyst. What else do we have? AV Technology will stay in tech mode for our next name, but move to a company that operates in an entirely different field. Avid is a major player in the media and entertainment industry for which it provides a wide spectrum of tools and workflow solutions, including both hardware and software. These high-end offerings are used in the making of everything from award-winning feature films and blockbusters to TV shows to some of the most successful music on the planet. The products being a staple of editing suits and music studios. Avid's portfolio of products include Pro Tools, Media Composer, Sylvius, Avid Venue, Avid Nexus, Medical Central, and FastServe. Avid stock was faring rather well in 2022's rough stock market, but took a severe beating after delivering quarter first earnings in early May. Coinbase Global, for the last oversold stock, will switch gears again and enter the new fangled realm of the crypto sphere. Coinbase is a leading cryptocurrency exchange, enabling its users, both institutional and retail, to buy, hold, and sell cryptocurrencies such as Bitcoin, Ethereum, Litecoin, and many others. The company is at the forefront of the crypto economy and has grown considerably since forming in 2012. When crypto was still very much the Wild West, Coinbase now boasts around 98 million verified users and 13,000 institutions using its services in more than 100 countries. The company entered the public markets to much fanfare last May in what has proven to be unfortunate timing. Both growth stocks and cryptocurrencies have suffered over the past year. And Coinbase's latest quarterly statement did not help matters either. I'm just gonna skip on Coinbase Global because still its future is vague from what I see. Some still think that Bitcoin is the currency of the future, but Warren Buffett also says he would never, even people were to give him like all the Bitcoins that exist in the world, he said he would just pay, he would even if he pays $25 for getting all that Bitcoin, he said he would never pay for it. You know, there are like this side and other side, and like I'm like on the neutral. So Coinbase. So from what I see, Coinbase Global is like I'll just be on the neutral position instead of buying it, right? Okay. Anyway, Tesla loses top spot in Kathy Wood's flagship phone. This stock is the now new number one. Tesla loses top spot in Kathy Wood's flagship fund. So, ARK Invest founder Kathy was a longtime Tesla bull. Her 2026 price target for the electric vehicle maker shares is $4,600. Tesla, though, isn't the largest holding in ARK Innovation ETF anymore. That distinction now goes to video streaming services provider Roku. It accounts for about 8.4% of ARK Innovation's holding. Tesla accounts for about 8.2%. So Roku is like it accounts for about 8.4%. Warren Buffett is holding these stocks for massive free cash flow with inflation near 40-year highs. You should too. Wall Street pays a ton of attention to company earnings, but reported earnings are often manipulated through aggressive or even fraudulent accounting methods. That's why risk-averse investors need to focus on companies that generate gobs of free cash flow. Moody's, Shopify, and more fast stocks that aren't as cheap as they look. Stocks are tumbling and bargains are bound if you know where to look. But buying deep doesn't work in a bear market. Neither does it simply scooping up shares of beaten down companies. Hmm. But buying it deep doesn't work in bear market. Neither does. In fact, that can be a recipe for more losses because again, what works when stocks are going up. Uh, what works when stocks are going up doesn't work when they're going down. Take earnings in a bull market, especially one fueled by the Federal Reserve pumping money into the economy. It doesn't usually matter what kind of numbers a company reports. Hmm. The market carnage may not be over, but fund managers aren't already buying these types of stock. Nestle. The market carnage may not be over. The worry of the month is that the U.S. is headed for a recession. But several fund managers at this week's Morningstar Investment Conference said that don't expect a severe slowdown. They're starting to hunt for bargains in the hard-hit tech sector and among industrial companies. Kate Moore, a head of thematic strategy for BlackRock's global allocation team, said at a panel discussion in Chicago that corporate balance sheets and behavior so far don't suggest a significant decline in economic activity. Yeah. Palo Alto Network stock surges as cybersecurity provider raises guidance. Palo Alto shares in cybersecurity firm Palo Alto Network rose more than 11% in the pre-market Friday after it reported stronger than expected results and raised its guidance for the year. Palo Alto observed cyber attacks out of Russia picking up since the invasion of Ukraine in February, increasing interest rates and protection, while shortages of supplies, such as chips, are eating into margins. The company said it's not feeling pressure on demand from its customers from faster inflation. Bitcoin is rising and crushing stocks. Crypto traders still preparing for the worst. Goldman Sachs has bought these two dividend stocks. Here's why. Simon Property Group, the first dividend stock we'll look at is a real estate investment trust REIT, a class of companies well known for their reliable, high-yielding dividend payments. And the next one we have is HF Sinclair Corporation. The second dividend stock on Goldman's radar is an energy company formed earlier this year, from the merger between Holly Energy Partners and Sinclair Oil. The technician who called the 2020 market bottom says a shocking rally is in store. Market watch. How can I stop the pain and make money in this not marriage market? The market is in full panic mode. The S&P 500 is down 18% year to date. The Nasdaq is down a staggering 27%. And even the Dow Jones, made up of the 30 most prominent publicly traded companies, is in correction territory. According to Bank of America, there's one thing that might save the stock market in 2022: money that corporations can return to shareholders. The best hope for 2022 bulls lies in the ability of investors to dislodge the $7.1 trillion in idle U.S. corporate cash. Bank of America forecasts that share repurchases dividend in the U.S. currently at 12-year low will likely go up moving forward. A lot of companies pay dividends, but some are more generous than others. Apple and Microsoft stocks rise as rough week for big tech ends. Starbucks CEO Howard Schultz orders a double shot of the stock. Howard Schultz isn't done stocking up on Starbucks shares. Back for his third stint leading Starbucks, Schultz has been aggressively buying the coffee retailer's tumbling shares this month. Starbucks stock has fallen 38% in 2012 and is off 43% from its 52-week highs. Why Cisco's earnings are causing networking stocks Juniper and Broadcom to sink. Shares of Cisco Systems were sharply lower. Shares of Cisco Systems were sharply lowered Thursday after the networking gear market issued a weak sales forecast for its current quarter. The warning sent stocks of other networking companies tumbling. Cisco said it expects fiscal fourth quarter revenue to fall between 1% and 5.5% from a year earlier. Wall Street had been projecting an increase of nearly 6%. For the fiscal year, Cisco said it expects revenue to rise between 2% and 3%, down from a previous forecast of 5.5% to 6.5%. Broadcom stock jumps ahead of quarterly earnings due. Broadcom stock slumps. If you're looking for stocks that are setting up in a base ahead of earnings, here's one that fits the bill. Broadcom is expected to report on June 2nd and is trading about 16% under a 645 buy point. The pattern is a third stage cup would handle, which involves more risk than a first of second stage formation. Palo Alto. Reported a fiscal retail rack is a good news for Amazon stock. It's a tough time to be a retailer. The sector has been pummeled this week. Tough time to be a retailer. The sector has been pummeled this week after lackluster earnings heightened concerns over the health of the consumer amid rising inflation. Warren Buffett is undeniably the most famous and influential investor in modern history, based on his extraordinary performance record. Not surprisingly, the investment portfolio of Berkshire Hathaway, the holding company employing the Oracle of Omaha as chairman and CEO, receives wide media attention and scrutiny, even though Buffett is no longer making every investment decision. Warren Buffett's Berkshire Hathaway holds a portfolio of blue chip U.S. stocks valued at $390.5 billion as of March 31st, 2022. The portfolio's five largest positions are Apple, Bank of America, American Express Company, Chevron, and the Coca-Cola Company. Apple is Berkshire's largest holding, accounting for nearly 41% of its stock portfolio. The top five holdings account for nearly 70% of the portfolio. During first 2022, Buffett dramatically increased the Berkshire's holdings of Chevron. Which are the top 10 stocks Berkshire Hathaway owns? Berkshire Hathaway runs the Berkshire Hathaway Holding Company, which in turn is the major shareholders of a number of large public companies. After the top five listed above, Berkshire's next largest public company investment include the Kraft Heinz Company, Moody's Corp., Occidental Petroleum Corp., U.S. Bank Corp., and Activision Blizzard. Wells Fargo bullish on these two stocks for over 50% upside. Match Group. The first Wells Fargo pick is a Texas-based company in the online dating field. Match Group. This tech firm owns and operates an active portfolio of online dating and matching services, including leading names like Tinder, Match.com, and Occupid. Match Group boasts an enormous reach from the online world to the real world, with apps that have been downloaded over 750 million times. Okay, Wells Fargo. Inflation started taking off last year and is now near 40-year highs. Last week, the world's major central banks took a pivot toward an anti-inflationary policy stance, bumping up interest rates in a move that was expected but also caused for concern. While the prospect of central bank action to tame inflation is not positive, the required interest rate bumps could also push the economy into recession. In the meantime, investors are busy waiting for the next Fed move and waiting for the next data release, and waiting to see what will happen in the coming months. According to Samuel Samana, senior global market strategist at Wells Fargo, if we've seen the worst of the rate of change from long-term interest rates, it may create room for equities to do a little bit better. Taking this into consideration, our attention turned to two stocks that Wells Fargo think have solid growth prospects, with the firm's analysts forecasting at least 50% upside potential for each. Using tip range database, we found that both tickers also support a strong buy consensus rating from the rest of the street. Let's take a closer look. Match Group. The first one we have is Match Group. While Match Group has had a long run of success, the company is now coping with coming changes. Earlier this month, the company announced that longtime CEO Shar Dubey is resigning after 16 years of service. Dubey will be succeeded by Bernard Kim, who comes to Match Group from the social gaming firm Zynga. A Match Group controls the highest grossing, most downloaded dating app in the world, Tinder, and that is reflected in the company's top line. At $799 million, the top line was up 20% year over year for first quarter 2022, a quarter which the company admitted uh, was impacted by both COVID and the Russian-Ukraine war. The company saw an overall increase of 13% in total payers. to 16.3 million. Again, that was driven by the 34% increase in the Asia Pacific region. The company finished first quarter with a strong balance sheet. Hmm. Despite Tinder's widespread use and success, the company's stock is down 45% this year. However, five-star analyst Brian Fitzgerald of Wells Fargo is not overly worried and paints an upbeat picture of Match's prospects in the long term. Match for the first time disclosed company-wide MAU, pushing back on recent bear thesis on declining user engagement. While we expect crosswinds to continue, we view fundamental opportunity as very much intact and valuation is compelling at current levels, Fitzgerald opined. Max Linear. Now we'll shift our attention to a semiconductor chip company, a version of the niche that quite literally makes the digital world go round. Max Linear is a designer and distributor of integrated radio frequency, analog, and mixed signal semiconductors. Chips used in applications from automotive and industrial connectivity to wireless access and Ethernet switches to router and extender hardware. Max Linear's products have also found wide use in the continuing rollout of 5G infrastructure systems. Max Linear. That alone would give this company a solid position in the chip world, but Max Linear recently took a step to firm up the position. Hmm. Looking at the Silicon Motion deal, Wells Fargo's five-star analyst Gary Mobley writes, while industry investor reaction has been negative, we view this deal as a long-term opportunity for MXL. Kathy Wood has simple response to tasks like getting booted out of an S&P 500 ESG index. Ridiculous. Top 5 spot in Kathy Wood's flashy fund. Has lost its crown jewel status in Kathy Wood's main fund for the first time in about 4.5 years. Alan Marsh Company had commended the pole position by market value in the Art Innovation ETF. Mm. Uh, an exchange traded fund known as ARC on most days since at least 2017, according to data compiled by Bloomberg. They changed on Thursday when electronics product maker Roku, a firm with $13.2 billion of market value, pivoted to take the top spot. Hmm. With John Deere's, Ukraine says it repels Russian attack as war grins and honest. Ukraine says it repels Russian attack as war grinds on east. G7 countries to provide $19.8 billion in aid to Ukraine. Biden, South Korean chip plant a model for deeper ties to Asia. Could be profitable in FY 2022 despite bear market. AMD shares may be down but ready to bounce back. Will John Deere's earnings help to calm the markets? Three retailers that defied first quarter headwinds. Announcement expected to confirm $7 billion auto plant in Georgia. The three most upgraded stocks you can buy now. Sulfide stocks makes a mad dash to overweight rating. Silicon Lab stock is falling to a better price. Three retailers that defied first quarter headwinds. President Joe Biden opened a trip to Asia on Friday. by touring a South Korean computer chip factory that will be the model for another plant in Texas, offering it as a way to deepen ties with the Indo-Pacific and fuel technological innovation and foster vibrant democracies. So much of the future of the world is going to be written here in the Indo-Pacific over the next several decades, Biden said. This is the moment, and my view, to invest in one another, to deepen our business ties, to bring our people even closer together. Biden's message was pushed toward the promise of a better tomorrow. It was also aimed at U.S. voters amid political challenges at home, such as inflation driven higher by the chip shortages. As he tries to show that his administration is delivering on economic growth. The Democrats' first visit to Asia as President came as polling released Friday by the Associated Press NORC Center for Public Affairs Research found Biden's U.S. approval rating at 39%, the lowest point of his presidency. The survey also found deepening pessimism about the economy and the state of the United States, especially among Democrats. About 2 in 10 U.S. adults says the country is headed in the right direction or describe the economy good, down from about 3 in 810 in April among Democrats. Just 33% says the country is on the right track, down from 49% last month. So people are pessimistic on. So a lot of Americans are pessimistic on the outlook of the country. Mm. Samsung, the chip plant's owner, last November announced it plans to open a $17 billion semiconductor factory in Texas. A semiconductor shortage last year hurts the availability of autos, kitchen appliances, and other goods, causing higher inflation worldwide and crippling Biden's public approval among U.S. voters. The president noted that the Texas plan would add 3,000 high-tech jobs and the construction would include union labor. These little chips, Biden said in remarks after he toured the plant, are the key to propelling us into the next era of humanity's technological development. Biden was seeking to frame business collaboration, foreign investment in the U.S. as part of his broader economic goals, and also good for him domestically. He was to appear Sunday in Seoul, South Korea, with the chairman of Hyundai Motor Group on Hyundai's decision to invest in a new electronic vehicle and battery manufacturing facility in Savannah, Georgia. Throughout the 5-day visit to South Korea and Japan, Biden will grapple with a multitude of foreign policy issues as he tries to explain their relevance to the American Republic. In his remarks Friday, Biden did not mention China, which has emerged as a prime competitor with the U.S., yet he stressed the value of alliances that currently exclude the country. Greeting Biden at the plane was South Korea's new president, Yoon Suk-yeol, and Samsung Electronics Vice Chairman Lee Jae-yong. Yoon is a political newcomer who became president, his first elected office just this month. He campaigned on taking a tour stance against North Korea and strengthening the 70-year alliance with the U.S. Before Biden spoke, Yoon said in remarks that he hoped the U.S.-South Korea partnership evolves into an economic and security alliance based on cooperation in advanced technology and supply chains. The chip plans show the unique nature of manufacturing, as the visitors were required to don white laboratory coats, and blue booties do help keep the facility clean. Who did not wear protective clothing saw a demonstration of the machinery. At one point during his tour, Biden received an in-depth explanation of the KLA system on the Samsung plant floor. The California-based company is a major supplier of Samsung semiconductor operation. After a worker named Peter explained the ins and outs of the machinery, Biden quipped, "Don't forget to vote" when he returns home to the United States. In closing, Biden slipped and thanked Moon, a reference South Korea's immediate past president who held the office for several years before Yoon's recent re-election. Biden quickly corrected the slip up. "Thank you for everything you've done so far." And blah blah blah. Okay. Next, Rapid7 could be profitable in FY 2022 despite a bear market. AMD shares may be down but ready to bounce back. Shares of advanced micro devices have had a rough year, but that is not to say that they are alone in this. Uh, Escalating interest rates, supply chain issues, and skyrocketing energy prices have put pressure on many companies across uh, various industries. After a robust couple of years, then AMD has taken a pretty big hit, losing roughly one third of its value in quarter first 2022. AMD has been climbing the market. The new year brings new challenges. Announcement expected to confirm $7 billion auto plant in Georgia. A year after the state of Georgia and local government partners spent $61 million to buy a sprawling tract of land for future industrial development. Announcement expected to confirm $7 billion auto plant in Georgia. A year after the state of Georgia and local government partners spent $61 million to buy a sprawling tract of land for future industrial development, Governor Bryant again planned to travel to the site Friday for what his office would only describe as a special economic development announcement. All signs pointed to Hyundai Motor Group building a massive auto plant at this site outside Savannah. President Joe Biden visiting South Korea, and his schedule uh, included a weekend event with the company's chairman to discuss Hyundai's decision to invest in a new electric vehicle and battery manufacturing facility in the area. According to the White House, expected to cost $7 billion and employ up to 8,500 workers, according to two Georgia officials familiar with the plans. The plant would rank among the largest development deals ever in Georgia. The officials were not authorized to discuss the project publicly and spoke on condition of anonymity. The announcement comes 5 days before Canfor faces a contested Republican primary election. Hmm, okay. Rapid 7 business overview. The disadvantage and risk of Rapid 7. Rapid 7, unlike most of its competitors in the cloud security space, has the very rare possibility of turning a profit this year, which probably comes as a great surprise to many investors. Given the macro backdrop, the business has high APR growth, surging top line, and quality recurring revenue. Has a solid quarter last year. This business recorded a 38% year-over-year growth with 92% of its revenues. Okay, let's look at chart Rapid 7 and Okay, now I'm done reading the articles of today and yesterday and the day before. And now let's go over to the one that I invested. Okay. Marco Libre. What's up with Marco Libre? Are they doing good? Is there any articles relating with Marco Libre? I'm buying these two resilient stocks during a bear market. Okay, here's what it says. Marco Libre. There are some excellent bargains for long-term investors right now, even when it comes to resilient business. 824.54. Okay. Here's an entertainment conglomerate and an e-commerce company that look especially attractive. Here are three companies I'm continuing to add to my portfolio in recent months. There's an old saying in real estate investing: you don't make your money when you sell, you make it when you buy. While that's generally used in real estate quote, it applies quite nicely in a bear market environments. In fact, some of the best investment returns I've ever achieved were from shopping for resilient businesses during the initial COVID-19 pandemic crash. It's always important to be selective. This is not a great market environment for unprofitable business. They might need to raise capital, for example. However, buying businesses that are well positioned to make it through the tough times and grow on the other side can be an excellent way to create long term wealth. With that in mind, here are three stocks that I've been buying recently in my personal portfolio. A great business in good times and bad. If you've been to one of Disney's theme parks lately, or e-commerce is trend that even a bear market can't break. Buy for long term. To be perfectly clear, although I believe both of these stocks are incredible bargains for from a long-term perspective, I have absolutely no clue what these stocks will do over the next few weeks or months. And inflation gets even worse, or we end up in a deeper recession than experts are calling for. It's entirely possible for both of them to decline significantly from the current level. However, both of these are such solid and resilient businesses that I've been incrementally buying them with the plan of ignoring the inevitable roller coaster ride in the short term as the market slump plays out. The bottom line is that this: if you measure your investment performance in decades, this could be a tremendous opportunity to add both of these great businesses to your portfolio at a discount. Okay, one crushed, two weeks.com. Okay, Mercado Libre. Wix is a website building service. The stock is down a whopping 57% just this year. The business is set to grow steadily over the next decade. Investors getting too pessimistic about this long-term compounder. On Monday, May 16, website building platform Wix.com reported its earnings results for the first 3 months of 2022. The company posted a solid first quarter revenue growth of 14%, but its guidance was below Wall Street estimates, causing investors to sell shares the day the report was released. Investors are getting increasingly bearish on software and internet platforms like Wix, so it is not surprising to see a reaction to these results. Even though guidance has been brought down, Wix still looks like an incredible bargain for investors right now, with shares down 57% this year. Here's why. First quarter results looked fine, but there was nothing spectacular. Wix's core business is selling premium subscriptions for people to build and manage their websites. It has over 6 million paying subscribers around the world who pay a monthly, annual, or multi-year fee. It has over 6 million paying subscribers around the world who pay a monthly, annual, or multi-year fee to access its website building tools. It has over 6 million paying subscribers around the world who pay a monthly, annual, or multi-year fee to access its website building tools. The company uses annualized recurring revenue mm, as a key metric that evaluates monthly revenue multiplied by 12. In the first quarter, these subscribers translate into creative subscriptions revenue of $255 million, up 13% year over year, and creative subscriptions ARR of $1.04 billion. ARR was up 12% in the first quarter and has grown at a 20% compound annual rate over the last 2 years. New growth drives bearing fruit. Rick started out with a do-it-yourself website building tool, and that is still its bread and butter. Oh, hey, can you hear me? Can you hear me? Moon? Moon, can you hear me? Can you hear me? Oh, awesome, awesome. I thought you were busy having a meeting with your teammates. Are you done with it? Are you finished? Short break. Okay, awesome. Short break. Okay. Okay. I'm almost done with YouTube Live. Um, you know, these past days, like I couldn't catch up with some of the articles, so I'm like, busy catching up with latest trend and like what's up with the stock market, and like I had to check up on some of the news of the companies that I invested into. So hmm, I'll be calling you right away after this is done. Okay, well, I'm almost done. And just so you know, uh, could you call me when your meeting is done? From what I know, 11:30 was okay, but then you never know when your meeting will be finished, right? So let me know when your meeting is done. Is it okay? My girlfriend is busy. My girlfriend is having a short break. Hmm. Okay. Okay. Anyway, this is it for today, and I'll see you guys tomorrow. Okay. It's been already 55 minutes. So okay, I'll see you guys. Boom. I'll see you right away. Okay. Bye bye. Bye bye.